So one of the things we're going to do today is we're going to remind ourselves what a bank reconciliation is. What's the purpose? Well, we're going to be comparing the accounting records of cash in our checking account, in our cash ledger, to the bank records, to the bank statement, to make sure that the two, find the differences, find out why is a difference. For this class, we're going to use the two-column bank reconciliation, and we'll take a quick look at what it is. Well, we're looking at the left side there, and this is where the whole CIE SEN DO acronym comes from. Over on the left side, we're going to adjust the book balance. On the right side, you can adjust the bank balance. To be honest, if you want to do the bank balance on the left side, the book balance on the right side, go for it. Just make sure you make the adjustment. So what adjustments are made on the bank reconciliation? Well, first of all, you start with the book, and this is where I suggest you start. You start out with that checkbook balance. That's what the C stands for. To that, you'll add any interest you earned. That'd be interest the bank has that you didn't know you had quite yet, and it's hard to anticipate exactly what your interest will be earned in any given month due to them using average bank balances, and sometimes that depending upon the number of hours and money was in an account. So usually you just get that amount from the bank. If you have any errors, you might need to add. That's if you swap out 15 for 51 or 450 for 45 or something along those lines, you could have a book error. Well, there's a couple subtractions as well. Part of the CIE SEN DO acronym. Your S is service charge, which again the bank will tell you. Usually this is somewhere between $5 and $10, maybe $15 for a company that has a business checking account. You might have an error, it might go that way, or you could have those NSF checks. That's the bounced check, where someone writes a check they can't actually cash. And in the end, you get to your adjusted book balance. Now, how about the bank side? What adjustments do we need to make for the bank? Well, you'll start out with a bank balance, so whatever's on that bank statement. That's the beginning point. From there, you'll add deposits in transit. Those are your deposits that you've made, but the bank hasn't quite recorded it yet. Sometimes it takes a bank a day or two to record all the deposits you make. So if you make a deposit in the afternoon, and then you receive a bank statement the next day, chances are that deposit will not be on that bank statement. Well, you'll subtract the outstanding checks. Those are the checks you have written, but they have not been processed yet by the bank. And that will give you your adjusted bank balance. One thing to look for, you may have errors, but you need to make sure that you enter all the other information out to find out if you have a bank error. So if you've done everything, you've entered all of your book adjustments, all of your bank adjustments, and you just can't reconcile, it's very possible, although unlikely, that the bank did actually make an error. So you got to be prepared to look for that.